What's good, YouTube? This video was supposed to be a weekly breakdown, but as you guys can see, I only took one trade, the Euro CAD, that I already have broken down in this video. So if you want to see the breakdown on the Euro CAD, just go and watch the video. In this video today, I'm going to show you guys how to avoid a loss when it comes to the easy money concept strategy. So we first draw out our structure to identify if we are bullish or bearish. And you see right here, price was previously bullish, making higher lows, higher high, followed by a lower low, breaking this low to turn the structure into a bearish structure, followed by a new lower low. So we are right now in a bearish structure. We have our impulse, this one engulfing candle. This is our impulse to the downside to create a new lower low, breaking and closing below the lowest point of the previous structure. So you guys clearly see that this was the lowest point of the previous structure, and we had a break and a close with this candle below it. The impulse is all one color, followed by the retracement of minimum 2 daily candles, which are also all the same color. So we have a valid setup on the daily time frame. Now we go to the weekly time frame, and on the weekly time frame, we're going to look for our support or resistance that could be of influence. You guys can clearly see that price right now is at a support level. I will have to remove this candle right here to give you guys a view of what the weekly time frame was looking like at the moment. So let's play it forward. This was how the weekly time frame was looking. I'm looking for sells. The structure on the daily time frame is a bearish structure, so I'm looking for sells. But as you guys can clearly see, the weekly time frame is at a strong support level. Price came to this support level right here, had a big push to the upside, came back down, found support, went back to the upside, came back down, found support again, went back to the upside. So if price was to come back right here, more than likely it will have a bullish reaction, even though if it's just a short bullish reaction, and I will be selling at support level, and that's not how I trade. I want to sell when price is at a resistance level and buy when price is at a support. So the daily, I'm looking for sells, and the weekly is at support. So if I go to the daily time frame, on the daily we will draw our fib just like normal in the opposite direction to measure the distance of the new impulse from the highest point to the lowest point in this case. Then we go to the 4 hour, where we will be waiting on the break of the 61 level to place our entry. So right now we're waiting on the break of the 61. Right here you can clearly see the 61 has been broken. So our sell limit goes on the 61, or stop loss on the 88, and our take profit on the negative 27, giving us a minimum of 1 to 3. So right now you can clearly see we have been tagged into this trade. But what happens next is price shoot right through our stop loss, and if you would have taken this trade, you would have lost this trade, because the weekly time frame plays a key role in this strategy. If you're looking for buys on the daily time frame, you want the weekly time frame to also be at support, or at least supporting your analysis of looking for buys on the daily time frame. If you're looking for sells, like we were looking for on the daily time frame, and the weekly is at support, because this is the support level on the weekly, you would also want the weekly to be at resistance, or at least supporting your analysis for sells on the daily. In this case, it wasn't. The weekly was at support and the daily was looking for sells. So this is how you avoid losses when it comes to the easy money concept. I appreciate y'all for staying with me, and I will see y'all in the future with new breakdowns. Peace.